Yeah, good morning, everyone. So we had seen in last 2 days US market showing positive trend, and same got reflected in other market as well. Uh, the main the bounce back is driven by mainly the expectations of the result of midterm elections over there, where they expect the they expect that the both the parties will have mix uh, mix holding in two different houses, wherein the aggressive stand of Fed or the restrictions on can be controlled, and that can act positive. So that is what the thinking of the market is, and let us see how it comes out. Uh, Apart from that, we had seen quite a few metals has bounced back in last few days, which is mainly on account of China is expected to loosen its COVID policy, wherein they had a zero COVID policy, which they may loosen it. So that is putting some positive impact on metals, and that is also supporting the world market. So overall, today also futures of the US market are flat, but we need to cover up for last 2 days. So the Indian market outlook seems comparatively positive for today. I'll request technical team to take up from me.
Yes, thank you. So, good morning, all of you. This is Swati. Today, looking towards the global market, as Sir has already mentioned, that the markets are looking very positive. Taking a clue from global market, we are likely to open with a gap up opening, and Nifty for the today intraday purpose is likely to test the 18,300 levels on the higher side. So the immediate resistance is placed at level. Any more about that level, we expect this rally is likely to be continued towards 18,370 to 400 levels on the higher sides. Whereas on a downside, the immediate support is placed at 18,100 and 18,000 levels. View will remain a positive because Nifty is maintaining a very positive closing above 18,000 psychological level from the last 2 to 3 trading sessions, which gives a very strong indication on the technical front. Coming towards the bank Nifty, Monday, I have specified that the 41,800 was acting as a crucial resistance level on the bank Nifty front. But somehow Nifty managed to maintain a break that level and maintain a positive closing above that level, which gives a very strong sign on the technical front. So this pullback rally is likely to be continued towards 42,100. The immediate resistance is placed at above that level. We can see some positive momentum towards 42,400 and 42,500. Whereas on the downside, the immediate support is placed for today intraday purpose is 41,600. Below that level, 41,400 levels can be seen. So the view on the Nifty and the Bank Nifty will remain a positive as long as it sustains above the mentioned support levels on the closing basis. Coming towards the Nifty Finance, 18,970, 19,140 are the resistance level we need to keep eye on it. Whereas on the downside, 18,590 is the first support level. Any move below that level on the closing basis will witness some profit booking, which might take a Nifty Finance towards 18,390 to 18,300 levels on the downside. Coming towards the stock specific, Tatacom really looks very good at the current market price. The particular stock is trading in the high tops, high bottom formation. So we believe that it has a potential to reach up to 1340 levels from the current market price. So one can take a long position in Tatacom with a stop loss for 1250 for a target of 1340. Second buy call, we are recommending it's HAL. This particular stock has also given a consolidation breakout and it's on the verge to test the fate of 2680 levels on the higher side. So one can take a buy call in HAL at CMP Stop loss can be kept at 2530 and target we are looking for 2680. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. Uh, on the derivative front, as I said earlier, 18,000 was a good support area. We briefly went towards those levels on Monday, and a good bounce back was witnessed. Again, very importantly, now the highest fall base has shifted upwards from 18,000 to 18,500 levels. PCR is at comfortable levels as well. So it looks like, we will now go to touch that 18,500 levels. And also probably, try and touch the all-time highs, which was around the 18,550 odd levels. The VIX again has come down towards 15 odd levels, which is a very good sign. As I'd been saying all this time, the VIX comes down, it is a good sign for the markets. The markets would rally because the VIX is down. That is what is really happening. I believe Nifty should move up towards 18,500 odd levels going forward. From the stock specific front, PSU banks did witness a good amount of buying, and they are likely to see further buying going forward. Also, IT sector looks good, even though there was some selling in the last couple of days. But the overall open interest profile is still positive, and we believe these stocks should perform going forward. Um, that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. On the results front, Ujjivan Small Finance Bank result was above expectation. There was a provision write back which led to big beat on profits, and also net NPA last time was also just 0.1%. It is now 0%, one of the lowest in MFI as well as the banking sector. Because of no asset quality issue, we see the next 4-5 quarters to be very good for the stock, and still it is available at 1.2 times FY24 price to book, which seems cheap. One more positive thing was that deposit growth was higher than advances growth, which was not seen in most of the banks. Deposits grew sequentially 10% and 42% year on year against advances growth of 8% and 44%. So apart from the fact that it belongs to MFI sector and long-term future might still be under question, but we think near-term return possibility is good and one can look at further buying in the stock. Care ratings result has improved. Ratings revenue, which is almost more than 90% of the total revenue, that grew 12% year on year, in comparison to CRISIL ratings revenue, which grew 13% and ICRA's 12%. So CARE has been able to maintain its market share despite the MD leaving a few months back. Operating expenses were flat year on year. This resulted into EBITDA growing by 25%, much higher than top line growth, and EBITDA margin came at 50% against year on year 44%. Also, system level credit growth is expected to grow at current high rates only, which bodes well for all ratings companies. So we are positive on CARE ratings. Sundaram Finance result is above expectations. Although AUM growth was slow at just 7% year on year, the NII did not show any sign of NIM contraction despite rising cost of funds in the system. Asset quality showed strong improvement with credit cost at just 30 basis points, which is pretty low for an auto NBFC. And with CV cycle expected to do well, we are positive on Sundaram Finance. Paytm, that is 197 Communications, the result was in line with expectation. Revenue grew 14% sequentially. EBITDA loss reduced from 630 crores in June quarter to 540 crores in September quarter. As losses are reducing every quarter, market may slowly have increase its confidence in the stock. But for now, we remain neutral. PB Fintech, which is a Policy Bazaar, result was also in line. Revenue grew 13% sequentially. However, EBITDA losses continue to remain at the 225 to 30 crore kind of number since last many quarters. So no improvement seen over here yet. We are neutral here. Aptus Value Finance Housing, the NBFC, which is into housing finance as well as small business loans, result has improved, mainly led by improvement in asset quality and strong uptick in disbursements, which we saw. Disbursement normally since last 4-5 quarters was in the 400-500 crore region. It suddenly increased to 1100 crores, and AUM growth remains good at 8% sequentially, 32% year on year. And all asset quality parameters like GNPA, NNPA, 30 DPD all improved marginally. Stock is trading at 28 times FY24 earnings and 5 times trailing price to book, which seems slightly expensive, but looking at the growth profile and the small size of the company, possible that near term it might not do much, but over longer period, if someone has long term horizon, then stock can compound well at 25-30% going forward. There is one IPO opening today, 5-star Business Finance. It's an NBFC, and IPO will be closing on Friday. We have given subscribe rating. Price band is 450 to 474 rupees. Total issue size is 1960 crores, constituting entirely of offer for sale, where some institutional investor is selling. 5-star provides secured business loans to micro entrepreneurs and self-employed individuals with an average ticket size of just 3 lakh rupees. Hence, there is very low competition, as practically nobody from listed space at least is catering solely to this segment. We have Aptus and Avas and some part of Equitas, which are doing these kind of loans, but the average ticket size over there is much higher, upwards of 8 lakh rupees, 8 to 10 lakh kind of region. So the real competitor for 5-star are the money lenders, and that's why they open all their branches in tier 3, 4, 5, 6 towns. Its robust underwriting process in this unserved borrower segment has resulted in healthy portfolio quality indicators with GNPA and net NPA of just 1.1% and 0.7%, combined with superior net interest margin of 19%, which is one of the highest that we have seen in the listed space, and ROA, ROE of 8% and 15%. The AUM has grown to 5,000 crores now as of FY22 from 1,000 crores in FY18, which is a CAGR of 50%. Company is being valued at 3.7 times FY22 book value and 30 times PE, which is at a discount to players like Aptus and Avas, who trade at 40 plus PE. Thus, we suggest to subscribe to the issue from long-term perspective. Thank you.
Good morning. Nitin Spinners has posted declined set of numbers for the quarter, both on the revenue and the margin front. Revenue declined by 28.6% QOQ, and EBITDA declined by 47.7% QOQ. Stock is trading at a PE of 2.9 times FY24 EPS. On mobile has posted declining set of numbers for the quarter, although the revenue declined by 3.1% QOQ. However, EBITDA margins came in at 0.2% versus QOQ of 5.6%. Stock is trading at a PE of 64.1 times TTM EPS. Aegis Logistics has posted ahead of expectation set of numbers for the quarter, although the revenue declined by 3.8% QOQ. However, EBITDA has improved and margin came in at 7.8% versus expectation of 4.4%. Higher EBITDA led to a higher PAT to the company. Stock is trading at a PE of 20.3 times FY24 EPS. Thank you.
Good morning. Bosch announced its results. The result was below expectation. Revenue came in at 3,662 crores versus an expectation of 3,702 crores, which grew by 3% sequentially and 25.5% on a YOY basis. EBITDA margin came in at 11.8% versus an expectation of 13.9%, as against 12.7% sequentially and 12.3% on a YOY basis. The company witnessed robust top-line growth, posting consistent profits over a low base in the same quarter of the previous year. Although supplies in semiconductors have eased out relatively, the supply chain ecosystem itself continues to remain fragile. Despite these uncertainties, including rising input costs, the management expects to build on the strong performance of this quarter. The stock is trading at a PE of 26.7 times FY24 EPS. Endurance Technologies announced its result. The result was marginally below expectation. Revenue came in at 2,361 crores versus an expectation of 2,270 crores, which grew by 11.7% sequentially, and grew by 25% on a YOY basis. EBITDA margin came in at 11.5% versus an expectation of 12.4%. Gross margin in the India business improved by 30 basis points sequentially, mainly on the back of higher operating income and a slight dip in RM costs. European business profitability was substantially affected by elevated energy and commodity costs amid the ongoing geopolitical issues. Endurance one new business orders worth rupees 2.89 billion in the quarter. Softening of raw material prices will aid margins in the third quarter of FY23. The company also continues to focus on high volume, high margin business and cost control initiatives to keep expanding margins. The stock is trading at a PE of 23 times FY24 EPS. Seat Tires announced its result. The result is marginally ahead of expectation. Revenue came in at 2,895 crores as against an expectation of 2,906 crores, which grew by 2.7% sequentially and 18% on a YOY basis. EBITDA margin came in at 7% versus an expectation of 6%. Revenue beat was led by robust momentum in both OEM as well as the replacement segments. Volume grew by 1.5% sequentially and 7% on a YOY basis, while the company took the price hike of 4%. Margins are expected to gradually improve going forward on the back of softening RM costs, improvement in product mix, and price hikes, with RM cost benefits to flow in the fourth quarter of FY23 onwards. On the replacement side, the management expects CV and tractors to remain weak, while PV will continue to witness robust growth. In terms of OEM, PV will continue to lead the upward trend, while CV will continue to remain flat. Domestic demand continues to remain steady, with an uptick in rural cash flows driving rural economy. The stock is trading at a PE of 16.7 times FY24 EPS. Thank you.
Good morning. PI Industries reported results which were above expectations, where revenue grew by 31% YOY, which was mostly led by the volume growth and rise in price realizations. There was more than 20% of revenues were registered from the new agri brands which were launched recently. Further, EBITDA margin was improved up to 24% on account of favorable product mix. The stock is trading at a PE of 37.1 times to FY24 EPS, and we are positive on the stock. Hindustan Foods Limited delivered stable performance. Revenue grew by 42% at rupees 661 crore on the back of ramping up of all facilities and the consolidation of their new acquisitions. The EBITDA margin was stable at 6.4%. The stock is trading at a PE of 93.4 times to TTM EPS, and we are neutral on the stock. Today, Arkan Specialty Chemicals Limited is opening the IPO. The price band is 386 and 407. The issue size is at rupees 1,462 crore. The company is incorporated in 2003 and it is the leading specialty marine chemical manufacturer. It is mainly producing the products like bromine industrial salts and sulfate of potash. So the bromine manufacturing is very crucial, and it is having a lot of entry barriers for the competitors to enter in this industry. As on June 22, the company is serving 18 global customers and 24 domestic customers. It is one of the largest exporters of bromine and industrial salts in India, and it is having the lowest cost of production globally. So the company has delivered 36.3% CAGR growth between FY20 to 22, and EBITDA growth of 77% in the same year. In FY22, ROC reported at 33.6%, and the company is valued at the PE of 26.8 times and EV by sales of 5.2 times, which is at discount compared to its average valuation of peer companies. Thus, we recommend subscribe to the issue. Thank you.
Yeah, apart from that, few more company results. Uh, Stockcraft came up with good numbers. Numbers improved sharply after 2-3 quarter of weakness, which was impacted by lower demand as well as high raw material cost for them. Now the things has turned positive. Though this quarter is generally a strong quarter for the company, but company can still continue to report similar or better number in the coming quarter, and margins which has declined earlier are likely to bounce back, has bounced back in this quarter and will continue to hold up in the coming period. Overall outlook seems positive for Stockcraft, and uh, share is trading somewhere at around 19 time FY24 earnings and looks positive from here. Another company, Honda India Power product, earlier Honda Shell's name, has also come up with very good numbers, wherein revenue grew by around 70% year on year, and also EBITDA margin expanded to around 14% from last year 8.7%. So this result also came up very strong. Then another one company, BLS International Services, has reported good numbers, and also declared 1:1 bonus. Revenue grew by around 87% year on year, and EBITDA margin also expanded to 15.9% as against year on year 14.5%. So this also has reported very good number, though share has moved up ahead of earning, but still some scope is there for that. So that's all from fundamental side. I now request technical team to take up from here.
Thank you, sir.
Sorry.
Good morning, everyone. Um, uh, Commodities are expected to rally further. When we witnessed profit taking, but however, we recommend to go long in gold around 51, 350 to 300 levels, maintaining a stop loss of 51, 150. Prices again are expected to test yesterday's high of 5180, 680 to 800 levels. Silver prices also, we recommend to go long around the support zone of 61 500 to 300, and prices are expected to test 62 250, 60 to 800 on higher end. Crude oil, we have witnessed close below the support of 7400, and prices are corrected till 72 30 72 levels, which are supportive levels. So one can expect a bounce back from 7200. For a pullback, one can buy. However, on 7350, again a selling pressure could be there. So one can trade within this range. Natural gas support lies at 500 levels. So a pullback till 525, 530 is expected, whereby again selling pressure could be witnessed. So profit taking is recommended on higher end. In metals also, prices are expected to rally further. So buying on dips is recommended. Copper can be bought around 673 levels with a stop loss below 669, and prices are expected to test 678, 680 on higher end. Aluminum also looks attractive. Buying around 205 levels is recommended, and one can maintain a stop loss of 202. Prices are expected to test 208, 2010 levels. Zinc also looks good. 262 seems to be a good support area, so buying on dips is recommended. However, on upside, 270 seems to be a resistance zone, and so we expect prices to trade in the broad range. That's it from me. I'll ask Ria to take over from here.
Good morning, everyone. So on the currency side, we are seeing quite a crash down into the dollar index. It has corrected from the highs that we had last seen at 113 to trading at 109 levels, around 109.60. This is one of the reason why we have seen the gap down happening into the USD INR as well. It has opened for after like a really long time at around 81, trading at around 81.55. However, on the longer range, we have always remained of the view that 82, 81.50 was of somewhat into the picture in the coming session. What you can right now look at is if the pair is able to sustain this downtrend, 81.66 will be an immediate resistance into the pair. If it gives a breakout to that, it will test 82.10 levels in the intraday session itself, 81, 86, 80 to 10. However, breakdown of today's low will lead the pair towards 81.25, 81.17. Be very cautious in trading into the USD INR. We are seeing volatile momentum into the JPY INR as well. I will recommend to stay away from it in today's session. You can go long into the Euro INR and into the GBP INR. Look for a breakout of 82.30 for trading into the Euro INR. You can keep an target at around 82.50, 82.62 with an SL at 82.10. Whereas into the GBP INR, you can go long at around 91.25 for a target of 94.57, keeping the SL at 93.90. That's all on the currency front. Thank you.